Warren Buffett, also known as the Oracle of Omaha, is widely regarded as one of the most successful investors of all time. He has built a fortune through his savvy investment strategies and a long-term approach to the stock market. In this guide, we'll be discussing the key principles behind Warren Buffett's investment strategies and how they can be applied to achieve financial success. Step 1. Focus on fundamentals. Buffett believes that the key to successful investing is to focus on the fundamentals of a company. This means looking at things like revenue, earnings, and cash flow rather than short-term market fluctuations. Step 2. Invest in companies with a durable competitive advantage. Buffett looks for companies that have a sustainable competitive advantage, such as strong brands or patents, which will help them to withstand economic downturns and competition. Step 3. Look for undervalued stocks. Buffett is known for his value investing approach, where he looks for stocks that are undervalued by the market. He believes that by buying stocks at a discount, investors can achieve a higher return on investment. Step 4. Avoid trendy stocks. Buffett advises investors to avoid trendy stocks, as they are often overhyped and can be a risky investment. Instead, he recommends looking for undervalued, fundamentally sound companies. Step 5. Have a long-term perspective. Buffett is a long-term investor and believes in holding onto stocks for the long term. He advises investors to avoid trying to time the market and instead focus on building a diversified portfolio of stocks that they can hold onto for the long term. By following Warren Buffett's investment strategies, investors can increase their chances of achieving financial success. It takes discipline, patience, and a long-term perspective to build wealth through investing. But by following Buffett's principles, investors can achieve the same level of success as the Oracle of Omaha. Remember, investing is a marathon, not a sprint, and with the right mindset and strategies, you can become a successful investor.